Good afternoon, everyone. Welcome to Banao Bharat's Trading for Living Thursday expiry monthly live session. Well, very quietly, market have been traveling since morning. Very deceptive up move. At all stages, it looked like it may not have enough strength to go up, but it deceived everybody's eyes and it has been in the up zone since morning. Another 1 hour to go. Let us look into the Nifty charts. See here, it opens at around 17,831. The first candle happens to be the buy, and after that in the second candle it breaks the first candle's high. It happens to be the green candle also, and after that for about 1.5 hours market does absolutely nothing, but it stays above 17,831 for most part of the time, and then slowly goes up for 2-3 candles, still not very high. It goes up to 17,860. So the breakout level itself was at around 17,830. After that couple of hours it doesn't do anything much. Then for a couple of candles it goes up, still it doesn't pick up steam. It just goes up to 17,860, which is 30 points higher, and again for 5 to 6 candles it does nothing, but stays conveniently and comfortably above 17,831, which is the buying level. Then you see couple of candles continuously goes up to 17,895. Now it travels some ground. So after so much of time, suddenly when you see the market, it is from 17,830 it has traveled up to 17,895, which is about 65 points higher. But all of this move has been very deceptively, it has been going up. Looks like at every stage it looked as if from here on it will exhaust, from here on it is consolidating, from here on it may not break upwards, because the options premiums are also very low. VIX is very low. Option players are actually freezing, not knowing how to trade in these kind of markets. In India, if you see, option players are all mostly option sellers based on the option geeks, which means they try to play on the theta, or they try to play on the volatility, and few of them really understand the gamma effect well, and they know how to hedge themselves or adjust their positions according to the gamma movement. But most players are clueless in this kind of low volatility. Option players are not able to do justice to their trading time. In fact, in our classes we always tell do not be a non-directional player. Options was introduced for the purposes of hedging, and you can play options also for your trading purposes, but very similar to your price action. Just that we cannot directly play the options price actions, but we can look into the spot, or we can look into the futures price and then take portfolio kind of a positions in options. So when your direction is on the upside or on the downside, you can accordingly construct your portfolio based on just the calls or just the puts or the combination of calls and puts. You can do 100 different variations when you know the direction. The problem today with option players is they are not able to decipher the direction, and whenever there is they know one concept, theta decay, and on the last day like this, on the expiry day, whether it is a weekly expiry or a monthly expiry, if the volatility is low, then the option premiums does not justify for them to sell and sit and wait, because even a small movement against them, the gamma movement, what they call, the small movement against them will eat away a lot of money that they have earned previously. So option game, you have to play options game. Even if you are in the options market, play the directional game and do not venture much into the non-directional strategies. You can make use of volatility, you can make use of theta, you can make use of delta or gamma, any of these option geeks, but ensure you have a payoff. Options market, what is very important thing is you should study the payoff. the payoff should always have a positive alpha. Most of the option strategies that these option players construct, it has a limited upside or limited payoff, or the known premium what they receive and the known risk. But this strategy where you have limited profit and limited loss, or limited profit and unlimited loss, or unlimited, yeah, these two strategies, whatever is there, this will not eventually give you bigger alpha over a period of say 1 or 2 years, because somewhere it will get nullified. Instead, it is always better to have a portfolio wherein your known risk is given, risk is known, and you always leave the legs open for unlimited payoffs. You never know when the markets will start trending well, and you will get that multi-bagger kind of a concept here in options. In options, you can see many a times in many settlements, a 2 rupees option strike price goes up to 200 rupees. A 20 rupees option strike goes up to 400 rupees. So this kind of 10 times returns or 20 times returns, if you have to see in options market, then the only possibility is when you keep your options portfolio in such a way that you have the leg open. If you have the leg closed in terms of ratio spread, then you cannot make much. And when on a trending day, it is always, if you are only option writer, you will write on the opposite side and take a small premium home. But markets would have done bank nifty and nifty, many a times there are 600 points, 700 points movement from the breakout level, not the intraday range. From the breakout level, there are many a times bank nifty has seen more than 500 plus points movement. So for options player, 500 points movement on the right strike price will mean not just 10 times movement, it will be more than 50 times of his capital. So given the possibility of options market, the option writers, what they make is very less. And especially if you are a non-directional player, then you have to be doubly careful. If you are a straddle and a strangles player, you have to have lot of capital with you for adjusting and rebalancing your portfolio constantly. Options market is a very difficult one if you don't know how to trade it. But if you want to really know more about options market, then go ahead and join our Trading for Living program, wherein we very clearly tell you how to construct the options portfolio on a daily basis, how to adjust, how to rebalance, when you have to let go of options sell positions, and when you have to hold on to the option buying for little longer duration. So all of these things you will learn from Trading for Living boot camps and also mentorship program. So this is with respect to the Nifty chart. Today being a monthly expiry and weekly expiry, I thought I should mention about the options market. This is the Bank Nifty chart, opens at around 42,928. You can see here it is again a gap up, but opens, and second candle is a big red candle. From there on it comes down, and if you notice, it has taken the support at first candle low. First candle low was 42,751. It just touches first candle's low, which means at that point in time it was the day's low. It takes support at day's low and cracks above the breakout of 42,928 and goes to 43,000, and from there on again after some time, after a couple of candles, it comes down, and now currently trading at the breakout level of 42,928. It is now at 42,900. So this is with respect to the Bank Nifty chart. Today being a expiry day, I wouldn't go much into the other stock details, though there is monthly expiry going on for most of the options future stocks. We will, and not much time also left. It's already 2:45, another 45 minutes of trade left. Hope you people had a good expiry session today. We will look into the markets once again with more details tomorrow morning. Until then, Om Swasti.